Well, hello everybody, I'm L.A. Little, and this is your weekly NeoTA wrap. We take a look at these markets, we look back at what happened last week, and actually over the weekend, and ask ourselves, what does it tell us about the coming days? I do this show once a week, every Sunday evening, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube under the channel L.A. Little. As far as what has happened or is happening, you can look back at the losses last week, nothing big, still up on the year. So, right? Same sort of thing we've seen for a long time. But we have a change in the air, and that change is associated with what has happened and is happening in Greece and what is unfolding this evening as a result of it. We've got futures down, way down actually, about 30 points this evening as I'm looking at them here as I talk. And what they're doing is they're coming back into these swing point lows. Right, 30 points off of 2100 is going to get you about to 2080. 2080 is just above this level. This is where it's shooting for. It's a swing point low over here as well. And if you look at that and project that on the weekly, right, the weekly also has a swing point low at that same price point, 2067.93. So when you're looking at this chart and you're looking at what's happening overnight, pressure is going to be, it's going to be a gap down into this area, so somewhere in here. Price is going to gap down. You had pressure on Friday, big volume off the Russell rebalancing, and that sets up kind of this, special case where you come down and you try to break it out again. Now, we've seen this over and over and over, and I dismiss it just as much as everybody else anymore, because every time it looks like this thing's going to break, somehow, some way they hold it up, and that's typically what happens in these kinds of markets. If we draw the ranges, you can see you were testing that range. Well, tomorrow you're going to gap down, you're going to test the bottom of the range. This week, shortened holiday week in the U.S. markets because of the holiday on July 4th, Independence Day, so we'll wait off the 3rd. So the pressure is going to be to break these out this week on lighter volume and potentially on cascading events out of Greece. Now, at the same time, if that's not enough drama, what you have is you have Asia, and in particular Shanghai, easing on its rates, trying to stimulate their markets. Their market's down 19% now in 2 short weeks. Let's pull this Shanghai up. Here's the breakdown. Remember last week you got the first bounce, right? The first bounce failed, and when it did, right, it comes down, it breaks, and it breaks with volume. It breaks with tenacity here as it takes out 2 swing point lows at once. And so the ones I'm talking about, of course, are here and here. These 2 swing point lows taken out together. That took it down. You can see the arrow there showing a break and confirmed in terms of volume because it broke this one with more volume. That's an ABCD structure down, and it's a big one if in fact it gets going. And so tonight, and what happens in China and Shanghai tonight is going to be a big deal because you've got the drama taking place in Europe that's putting extreme pressure on all markets. And the question is how is this market that's already down 19%, how's it going to react to an easing of rates right across the board, deposit rates, the discount rate, and the holding rates on the banks themselves. So, it is a very stimulative measure that they took, more so than one would expect. And how that plays out is also going to be a big deal tonight. So that's Shanghai. Let's go to Europe because Europe's the one that's going to get hurt. We're going to go to Germany first. Now, the expectation was that this market would, or not so much the market, but the politicians would find a way to resolve the issues, and somehow they would paper over the problems. And it had set up in such a way that it looked like that was the case, because if you remember, there was a bearish retest regenerate zone here. It got back over it, and that said, hey, this thing isn't going down anymore. It's probably going sideways on this time frame for now. Well, that didn't last long. Now you have the push back down. We're looking at the German DAX. German DAX is going to try to trade down to these lows most likely. And so the test is going to be down here. Let's look at it on the weekly. That's probably where the real emphasis is going to be. The big bar here, it's probably going to trade into that bar. That's the January 19th bar. On the DAX, it's a little bit different setup than you have on the CAX. We'll look at the CAX next. The retest regen here, the bullish retest regen, had already broken here, got retested, and eventually did resolve to the upside. Now, as it comes back down, it's transitioning sideways. There's another swing point low off of this bar, which happens to coincide with the big volume break higher on January 19th. That's when everybody starts front running what was happening with the QE story. So if he comes back in this area, it's probably going to be a buy. Now, if you just take projections, and we've seen the projections play out once already. We had the ABCD structure here that basically played out, and now you've got another one that potentially could play out and could take it back into this area, into these congruent these two bars to start the year. So that's the way the DAX is lined up and set up if it wants to break. The test will be, does it break? If it doesn't break, expect all those bears who just continue to think that somehow this market is going to blow up and trade down big, and they've thought that for many months now, but it never seems to happen. If it doesn't break, those guys are going to have to cover, and I suspect they're going to push their or try to pressure it lower this week. It's the best opportunity they've had in a long time. So that will be the test this week, tomorrow in particular, and we'll see how it breaks or doesn't break. Let's look at the CAX. The CAX is stronger. The CAX actually has this kind of a gap area here. I suspect it's going to trade back into that gap and try to get into the top of these two bars, the top of the actually the top of this high volume bar, which coincides with this low. So I expect that right there is going to be the key area. If it gets under that, then it's going to go after the lows. If it goes after the lows, the DAX is going to be breaking the lows. So to me, you want to watch the strength index, which is the CAX, see how it trades back into that gap and does it hold that area. If it does, more than likely the German DAX is going to hold as well. If you do the ABCD structures here, just like we did on the German market, you can see this one had completed as well. And if you draw it on down and then bounce it back up now, that one also brings it back in that Feb 19 bar, and that would be a bullish retest regen off that prior swing point high. And note that in this particular case, right, there hasn't been a test of this breakdown area. Well, actually, I need to take that back, I think. Let me make certain of this. So that price point is 45.98, and yeah, it did test back into it immediately. So the immediate retest regen pushes higher. So that does put the odds a little bit lower as it comes back. It's not nearly as high of odds. So here's the pushback. That's the area that's going to try to get back into if it breaks the lows. And the key to that, of course, over on the daily chart will be that gap area. Looking elsewhere, you're going to see pressure everywhere. If you think about what should happen tomorrow, you should see pressure on equities. You should see pressure on high flying stocks in general. You should see the gold market try to trade higher. You should see the euro try to trade lower. And you should see the Chinese market, the Shanghai market, try to hold and potentially press higher. That's what should happen. If you get any deviations, and you also should see bonds push quite a bit higher. If you get any deviations off of those are the things to note, right? Because that will set up the next set of signals that tell you probably if this is going to cascade lower or not. And if we're talking about cascading lower, I want to walk back over and remind you, I wrote an article many moons ago, way back in, I don't know, it's been at least a couple months at this point. And I talked about, the structure. I've written multiple articles about the structure, and if I come over here and pull you to the front page, and slide this over a little bit, you have over here, worry about a crash when it's time, quit worrying about it, 1980 South crash. This was written 2.5 years ago. And these articles outline the ideal of a structure to the market. That structure is a structure I talk about and have talked about quite a bit. And what it says is that when you get breaks of multiple swing point lows on multiple time frames, for in other words, if you can break these on this time frame, which also would break this one on this time frame, you can get a faster move down, right? That's the kind of cascade that can send you down and send you down fast. Now, where would it be trying to send you to if it breaks? Well, if it breaks, it's going to try to come to the next set of lows, the next support zone, which is down around 2000 to about 1970 or so. That's where the next two swing point lows exist on the weekly time frame, and they will also exist on the daily time frame as well, necessarily. Now, assume those break at some point. What do? You come after the next ones, right? This one happens to be a break of that. If it were to go that deep, would also be a break of this particular swing point, right? And that, of course, is a break on the long-term time frame. So, when I look at this and the cascading effect, potentially, you could get a move all the way back to here, be down 200, and still haven't broken down on the long-term time frame. I mean, that's how steep this run has been, and with no significant pullbacks other than this one, it's been a jolly ride to the top side. So, recognize 200 points down still doesn't even break, doesn't even transition trend on the monthly time frame at this point in time. What does that tell me, or what should it tell you? It tells you this is unlikely to break right now, and it tells you that even if this is the big move down, it's going to take a while. This thing's going to roll, right? And it's going to bounce, and it's going to do all that stuff it normally does. That structure is in place for the larger decline, but it's going to take time for it to actually take place, if in fact it's going to. The first test is this week, and that test is these swing point lows. That's where the test is going to be. You break those out, you can actually get the rollover effect finally starting to take place, right? So that's the key. If it happens, right, you can get the faster move down, you get the bounce, the failed bounce sets up the next move, so forth, so on. That's how markets roll. That's how they usually roll. It's not always the same, right? But the structure is always there. It's always evident. And when you see that structure, you have to recognize that there's more risk. And I've told my subscribers that for many, many weeks now. There is more risk, and we've been trading more carefully as a result of it. That's what you have to do when there's more risk on the table. Okay, let's see what else we got. You actually still have, and these are probably going to give way this week, but you still had the bullish retest regens on these markets, right? But they pressed lower off the Russell rebalancing, so they hit the bottoms with volume. That means to me that they're probably going to transition back into the range, right? We're going to stay range bound. And when I look at the NASDAQ, the NASDAQ's been one of the strongest along with the Russell. That range is, the biggest part of the range is there. And then you actually have the other part of the range inside that. And let's tidy that up so it actually looks correct. And that is probably about right there, right? The tops, these tops. And that kind of gives you two ranges inside there. Test will be back into that area, and if it holds that higher level, right? If those higher levels hold, up in this top range part, right? Then you're not going to have that much damage, really. I mean, so you're down 80 points. Well, 80 points on the NASDAQ when it's 5,000 really doesn't mean a lot. So you're down 3%. Who cares, right? It's just that if you start getting down 6% and start breaking swing point lows, then you've got something to really think about. Russell also held swing point on the way back. That was the retest regen. Now the Russell is the only one that really has a chance of actually holding this, and I don't know if it will or not. Odds are not good for it to do that, but that bullish retest regen takes you down to about looks like about 68, right? We could look at the bottom of that and see what it is. 126882. That's going to be the test here. You push down with more volume. That says you're going to try to test it again. So we'll get that test tomorrow. It's going to come right into support, and that will be the test. I would watch the Russell as a key indicator of what else is going to happen on the domestic markets. That's probably going to be the key there. Let's go look at the OX markets because these are going to move in terms of currencies, gold, and bonds. So let's start with the currencies and let's look at the euro because the euro should get whacked. Now the euro had gone up and tested the top of the range, pulled back. It should test the bottom of the range now. And so that would press this thing down. Let me see, where's it trading? 109.70. I would think this thing can trade down to yeah, it can trade down to the bottom of this range. Let's look at it on the weekly. Right, it was coming up to try to get higher, couldn't. The bar that it should try to come back into is 107. So that's the euro. That would be where you should find buyers if you're going to. FXY. This one's actually going to probably press. Let's see here. The dollar is going to be stronger. That's going to make this weaker. That's going to press it back towards the lows. And it probably just tests back into the lows is probably what it does. Let's look at gold. So gold should trade higher. And let's see what the gold market. Now the gold popped up on Friday if I remember right. It wasn't great, but it popped up. Yeah, so it came into this low bar, didn't have the volume, flipped around. Yeah, this is set up actually to go back higher. So this should trade back to the 114 area. That will be the gap area, and then that will be the key spot. Does it go higher or not? Silver was weaker than gold, and let's see what silver looks like. And silver actually is holding at the lows. That looks pretty pathetic, but it can bounce. Dollar's going to trade higher, and it probably going to trade back into the top of this bar, 25.46. Bonds are going to trade up, and they've been beat up so bad. The key for them will be able just simply to get back up and do the retest regen again. So you've got the retest regen here. Let's draw it in correctly. That's going to be the key area for it, and that looks like about right there. So you've got this big resistance all in front of it, and the key will be to get back into that and actually over it. And by the time 2, 4, 5, 6, yeah, by the time it does it, it will be a swing point high here because I doubt it's going to get over it tomorrow. So that will be the key here. And actually, look at this. The bonds did test the lows on lighter volume. So you had lighter volume up underneath, back over. That's a oh, did it get back over or not? It looks like it didn't. So that low was 115.26. No, closed three points into it, and that arrow tells me that. That's how I recognized it. So that actually traded lower. Huh. So that's well, it looks like it's just going to be a sideways bounce, just a bounce back up probably. Which also says, if that's true, says that this market's not probably going to be as bad as we think. Let's look at municipal bonds. All these bonds are probably going to get whacked tomorrow. High corporate, these should get whacked. The corporate bonds. Let's look at the high yield bonds. These should get whacked as well. They all look like they want to. And if I look at the junk bonds, I would expect these to get whacked. And they look like they want to. So they all want to go test those lows. Gas probably should sell off with a stronger dollar. And that would be interesting because this is slowly going to work its way back down in my opinion. So, well, not gas, but crude oil. And if we look at one last thing, and that is the sectors. If we pop over here, you're gonna get blowaways in some of these sectors. And what I mean by that is if we come up here, go to resources, and let me pull this back over, go to resources. Oops, that's not what I meant to do. Current trends, and pop these up. No, I'm not logged in. Let me log in. So if we go to the resources though and take a look at them, what you're going to see on the market trends is you've got some damage that's already taken place, but you've still got some areas that have held up. And in particular, you know, the ones that have held up, healthcare, right, consumer discretionary, and financials. Those are the ones that haven't been able to break down yet. What you're probably going to see though is you're going to see some damage this week. Unless this market holds, you're going to see some damage out on the intermediate term. And if that's true, that portends even more, shall we say, difficulties going forward. Because typically when you get 2 or 3 of these to turn, the rest of them eventually find their way down there too, or find their way on that turn as well. Industrials are in danger of doing that. The basic materials are in danger of doing that. And technology is in danger of doing that. So if we see that, if we see just one, probably one more break and hold lower and turn it sideways or down, then we're probably going to see all of them go on a trend transition lower as well before it's over. And what does that tell me? It doesn't tell me that we're going to break down completely, but it does tell me that we are going to struggle quite a bit longer as a result of it. So just recognize that if that's what starts happening here, you're going to see the market struggle for a period of time, and you'll see it struggle here as well. Okay, I think that's a pretty good preview of what's happening. It's going to be a fire drill this week. You got a week that the European markets are going to really take it on the chin, and it's all going to be about how the politicians play this out, because I don't see how Greek is not going to default at this point. I mean, they're fairly resolute in what they're going to do. They're going to hold their vote next Sunday, an up or down vote on whether they want to negotiate or not. And you know, the rest of Europe is kind of had its hands tied. I mean, you know, the European Central Bank can only loan it so much, can only support it a little bit of a hands-off support. They'll continue to extend what they've promised, but they said today, for example, they're not going to extend more. The IMF is certainly not going to extend more, and it doesn't look like the European Union is either. So, you know, the Greeks are kind of on their own, going to default, and then it's going to be a question of what that vote is, and that vote's going to take place on the weekend. So, in a holiday-shortened week in summer months, everything's lined up here for a lot of volatility, and I suspect that's what we're going to see. Well, thanks for joining me. It's going to be an interesting week. I'll check in with you tomorrow. We'll see how it plays out on the first leg on Monday when everybody comes back to work and the proverbial you-know-what hits the fan. Have a good one. Take care, and I'll see you tomorrow. Good night.